Hello, my name is Dan Kidd, and this is our strategic research project for Management 6400. Our group is made up of myself, Thomas Wilding, Donald Powers, and Hayden Wadsworth. And today we're going to be talking about the Alibaba group and whether we should acquire them or not.
Jack Ma, the founder and CEO of Alibaba Group, was in Seattle in 1990 in a coffee shop, just enjoying the day, trying to think about the future of the internet and the way that he wanted to proceed and the opportunities that were presented there. And as he was in this coffee shop, he's sitting there, and this waitress comes up and he asks her, "Hey, do you know who Alibaba is? Would that mean anything to you?" And she says, "Oh yeah, it's the guy who says open sesame." And that comes from an old Arabic folktale where, Alibaba and the 40 Thieves basically save a village because he's able to open the door with that magical phrase, open sesame. So Jack's thinking to himself, that's what I want to be for small to medium-sized businesses, is I want to be able to open the magical door for them to be able to compete in this world and to build up their business. And so that's how Alibaba was born. So the company was founded on April 4th, 1990. And within 2 years, they were able to surpass 1 million registered users on their website. Following that, in 2005, they take over all of Yahoo's operations in China. And then in the preceding 2 years, 2007, they have their first initial public stock offering in China, in Hong Kong. And then a short 7 years later, they're listed on the New York Stock Exchange under the ticker BABA, B-A-B-A. Creative, right? And so their vision is, as you can read, to build the future of infrastructure of commerce. They envision that their customers will meet, work, and live at Alibaba, and that they will be a company that will last for at least 102 years. There's some interesting things in there that I'd like to kind of break out and discuss shortly. The first off is they envision that everyone will meet at Alibaba, and so this will be a place for not only commercial businesses, but also consumers and even just social interactions to take place on their platforms, and that they will be the facilitators of that. And what they mean when they say they want everyone to work at Alibaba is they envision a place where their customers and their infrastructure enable people to build their businesses and to create value for themselves and others through a shared platform or ecosystem or interconnected system of networks. And finally, to live at Alibaba, they want to be basically the center of everyone's life. They want it to be an integral part of all of their consumers and business and all these people who are interacting and working here. They want it to just be a center part of their lives where they think about it, they talk about it, and it's just there. One of those things. And so the last bit where they talked about being a company for 102 years I found kind of interesting. The company was founded in 1990, and their vision is that they can get through to the year 2100, they'll have been around for 3 centuries. The 20th century, 21st century, and the 22nd century. And so that's their idea, is they want to be around for at least 102 years so that they can fill their dreams of enabling people and opening those magical doors for small and mid-sized businesses and consumers.
Alibaba consists of 3 main sources of income from their software platforms. All of these are free for members to subscribe to and use. The first consists of Alibaba.com, and that's a business-to-business commerce online, and it helps specifically small Chinese companies be able to run things more efficiently and effectively. Taobao, and that one's a business-to-consumer and also consumer-to-consumer platform. That's who it's targeted to. And this one helps, think of eBay, it helps those people. The other targeted market is from Tmall, and that's brand products going to the upcoming middle class in the Chinese market. And all of these, as I said before, make commission fees. And then also, although it's a free membership, you can have an upgraded membership, which allows you to maybe have sponsored posts, better spots on the websites and softwares on the platform, and that's how they make their money. Alibaba has seen large financial growth over the last few years. They've seen many of their major indicators double, or some cases even more, such as net income, sales, revenue, operating income. They're positioned well for both the short term and long term, with favorable current ratios and debt to asset ratios. Things are looking good for Alibaba. They have 114 billion in assets, as well as a market cap of 479 billion and an EPS of 3.78, and so in some ways they're still undervalued and looking great for the future.
Alibaba is competitive in a couple of different industries, but the two major ones that are material to their operations include the e-commerce and cloud computing industries. Now, these industries are both related to technology, and as a result, they have very similar outcomes and also very similar risks associated with operations in those industries. And so we'll address first the outlooks. Both on the consumer and the business-to-business scale, sales and growth are projected going forward in the continuing years for both of the cloud computing and the e-commerce industries, respectively. 7% increase in sales in the cloud computing and 12% in the e-commerce. So they're looking good. Things are looking to continue to grow, and there's a lot of opportunity here for Alibaba to cement themselves within a market segment. Following that, there are also similar risks associated with both of these industries, and they are dealing with security, regulatory, and also their reliability. Now security deals with a lot of personal data. There's a lot of personal data associated with both e-commerce and cloud computing. And there's always individuals who are seeking that personal data, and so there's spammers, hackers, and other businesses even trying to get a hold of this personal data, and there's a huge risk of them being able to keep this personal data safe and secure and protect their consumers' privacies. Following that, you have regulatory issues. These are very young industries, and so there's still a lot of laws and standards and things happening in the background between lawmakers in order to hold internet businesses or businesses that operate on the internet accountable and make sure that they're paying their fair share and whatnot. And so these sort of regulations, as they continue to come forth, can have a material impact on the operations of Alibaba in these areas. And then finally, you have reliability. This includes the concept of their ecosystem, or that network of interconnected businesses and platforms that we've talked about. Obviously they're going to be operating on these platforms, so things like power outages or damage to their servers or physical things like that shut their network down will have a material impact on their business as well. And so there's a huge risk for them to be able to continue operating in this way without those fail-safes and backups for that, including Amazon and eBay. Using some of the non-financial measurements that Alibaba has put out there as measurements of their own personal success. And this analysis was done using a multi-attribute attitude model, which is basically a marketing tool or analysis model that's used to compare competitors and the strength of a particular brand's position as they are compared to their competitors. So in this instance, obviously, Alibaba is the baseline. They're saying they want to be positioned in this particular point. And so we're comparing, how well are they actually positioned in that point as to where their competitors are at in that particular area as well. And so the 5 measurements that we used include the digital presence, which is talking about the networks and the interconnected ecosystem that we've discussed. How are they out there? How well are they known on the digital platform as well? And then also we talked about the broad selection of products and services available, and so we just generally define that as a broad selection. Following that, we have merchant quality, which is basically an average or a projection of the average customer ratings that are given for the various merchants on their platforms. Similar to that is also the product authenticity. Now this is also done through customer ratings, but we're talking more in terms of those ratings that are specific to the product and not so much the vendor. And so there is a little bit of separation there, and don't get tripped up on it. And then finally, we have the convenience of use. Now, this not only includes the consumer's ability to use it, but also those who are looking to sell and have their businesses on these platforms. How easy is it for them to come in and to perform those areas? And so what we found was that Alibaba is well positioned in those areas that they're using as a measurement of their success compared to their competitors. Amazon is a pretty close second, though. And so there's definitely some strong competition that they have, especially in U.S. markets, with them. And so they're definitely going to need to continually watch for that competition and be on guard for it.
All right, so we'll quickly cover the resources and capabilities section here. Some of their resources, first off, their location. They are based in China, which is a great market for them, a great location with billions of customers there and a growing e-commerce section. It's a real strength for them. Inventory, their inventory system is pretty neat. They have no fees, they have no warehouses, which is really unique, but it also makes them very easily to be copied, leaving open for competitors to be able to copy this sort of model and be able to repeat their same success. Relations, this is a very important section, their relationship with the Chinese government. They have a great relationship with the Chinese government. The Chinese government, really, they get to dictate who does work there in China and who doesn't. So these relationships assures that Alibaba will be able to stay in business for a long time and that they may actually be able to keep other people out as well. When it comes to brand, the Alibaba brand is a dominant brand. They have great brand recognition, really very strong. Capabilities, the economies of scope. There are 2 different retail sites that are owned and operated by Alibaba, Taobao and Tmall, which offer both different types of products, name brands, and then kind of generic brands, giving them great economies of scope. Along with that is the scale with these multiple retail lines and product offerings are quite extensive. There's almost anything you can imagine, Alibaba will sell it. Networking, this is a pretty unique thing to them, is the way they do their networking and the way they work with their merchants and suppliers. Most other e-commerce companies, listing companies, they post fees or they charge fees to the merchants that want to sell and do business on them. Alibaba is different in that they don't charge fees, but they do a revenue sharing. They take a portion of the profit. This encourages merchants then to sell, right? And because they're not getting charged a fee, they want to sell as much as they can, and they also encourage other merchants to get on there. Their network of merchants is rather large and continuing to grow. Finally, the employee capabilities. Alibaba employs nearly 20,000 employees. They have higher than average pay, which leads to greater retention and greater retention of those highly qualified or skilled employees as well. So all of those are great capabilities and the resources and capabilities for Alibaba.
All right, Alibaba's business and corporate strategies are unlike most firms that focus on e-commerce. They include consumer to consumer, business to consumer, and business to business. When you think e-commerce and a lot of big players in that industry, you think of like Amazon and Walmart, and both of those are primarily focused on the consumer to consumer end of things, where Alibaba does have a consumer to consumer product, but their main product, which is Alibaba, is focused on business to business. So they have that over their competitors, and there's only upward growth in that industry. So they do offer other strategies like the business to consumer and consumer to consumer, but they just have that competitive edge over their over other firms in that market. They are also very diversified, just like any other big firm. They have Alipay, AliExpress, Taobao, AliTrip, AliCloud. The list really just goes on and on. They've really covered all their bases. Alipay is just like a PayPal service. It's a secure way to check out and make payments. AliExpress is their consumer or business to consumer product where minimum order quantities are low and you can get things for super cheap. And then Ollie Trip is like their vacation service. Ollie Cloud is like a Google Drive. So as you can see, they're really diversified as a firm, which lowers their risk overall and just makes them less vulnerable to their competition. They have low overhead because they are a service-based firm. They're mostly just making a way for businesses to connect to manufacturers, so they don't have to worry about carrying high volumes of inventory, huge warehouses, real estate, all those things that really add up and affect a company's bottom line. Alibaba doesn't have. So like again, Walmart, they have huge overhead and they just have that over them to stay competitive. They're super convenient. The internet is a little more skeptical to purchase from China, but as they come out with new technologies like Alipay and free shipping and expedited shipping, it can take 3 days to a week to get product from China now. So as we advance in technology, it's just becoming more and more convenient and easy to order from Alibaba and trust sites like that. Innovation, they're constantly striving to come out with new products, new businesses, and make themselves a more dominant firm in their in the markets that they're in. So those are their biggest strategies, just on a high level of what they're deploying, and overall they're very successful at executing them, and that's what makes them such a powerful and dangerous firm.
All right, now we'll talk to you about current issues. Really, when it comes to current issues for Alibaba, probably the most intriguing one, and really the only one I'm going to be talking about, is the trade wars. And what this is, if you haven't heard about the trade wars, this is due to increasing tension between China and the United States, each imposing tariffs on one another. On July 6, 2018, President Trump issues a 25% duties on $38 billion of Chinese goods. This is leading to a greater tension. China's threatening to do the same. U.S. is threatening to do even more. Nobody really knows what the impact of this will be. The whole impact is not yet known. Many analysts believe the Chinese economy will not be overly affected. They will be affected some, but they say, hey, the Chinese economy is strong enough and they're going to weather through this without too much of an effect. Alibaba as well, they're kind of saying the same thing. That Alibaba really will not be affected too much, but we can expect Alibaba to feel more of an effect than the average Chinese company, just due to their trading in the United States. So it's an interesting issue, one that is definitely generating a lot of questions and a lot of uncertainty, but at this time it looks like it should not affect Alibaba too much.
All right, in our assessment and recommendations, I'm kind of covering all of the sections in one slide, kind of what we came up with for Alibaba and what we recommend to our investors. The first and foremost is that they are a first mover in their industry. And what we mean by that is China hasn't had anyone like Amazon or Walmart.com really come into their market. So Alibaba is the first mover in this industry, and they'll have that advantage over any other firm that tries to enter in the future. So they're going to stay competitive, and they'll keep that competitive advantage because they have started earlier. They have adjusted to learning curves, they've adjusted to customer complaints, all those things and experience that they've gained from being a first mover. Their potential for growth is huge. The market in the US is pretty much saturated. Almost everybody has the internet, everybody has access to Amazon and Walmart.com, and there's really not a ton of growth or potential in the US market, whereas in the Chinese market, not even a quarter of their population is using the internet, and they just have a huge potential for growth and to become a big force in the Chinese market. And that's another competitive advantage that they have over these US firms. Although they're not the biggest in the U.S., they are the biggest in China, and that economy is just emerging and becoming an elite market. Their product differentiation, I kind of covered that in my previous slide. They offer business to business, unlike their competitors, so they have that revenue stream which others don't. A big advantage is their founder, Jack Ma. He's known and has a reputation of leadership and just success. So they have him as a leader, and that's gonna lead to their continued success. Their brand and government relations also bring the firm value. One of the biggest things that are stopping Walmart and Amazon from entering the market are the government regulations, and the government is very picky on who they allow to sell in the country, and China already has all that in place. So that is a huge barrier to entry against their competition, and makes it less risky to invest in Alibaba. So overall, they're not super vulnerable to competition in the Chinese market, and they compete on a level with Amazon and Walmart in the US market already. So the investment with just that knowledge alone makes it worthwhile. They have a very large potential for growth. They're just at the tip of the iceberg, where a lot of these businesses in the US, they are already mature. They have already captured all their market value. So overall, we recommend that you do acquire this firm. We think that right now it'd almost be selling at a discount from what it can become. And that is our overall recommendation for Alibaba Group.